11.97 billion. One island, one quarter. Hudayriyat Island didn't exist as a residential market 5 years ago, but in Q1 2026, it became the number one real estate area in all of Abu Dhabi. Not Saadiyat at 8.8 billion, not Reem at 9.45 billion, Hudayriyat. So, if you're building a portfolio in the UAE and you haven't looked at this island yet, this video is exactly why you need to. We are covering what it is, who Mudon is, the yield projections, the risks, and how it compares to Saadiyat, Yas, and Al Reem. So, who is Mudon? Mudon Properties is a developer in Abu Dhabi, government-backed, established as an industrial zone operator, pivoted to master plan residential communities in the last decade. In 2025, Mudon posted 3.9 billion in net profits. The revenue backlog, 46 billion. In December 2025, Mudon launched a project called Hudayriyat Island and raised 3 billion in a single day, sold out in 24 hours. This isn't a speculative developer chasing a trend. This is Abu Dhabi's answer to Emaar. With government capital behind every delivery, track record is shorter than Aldar, but the financial backing is institutional. Hudayriyat Island sits 15 minutes away from Abu Dhabi city center, connected by dedicated road, bridges, no ferry, no hassle. It's a lifestyle island. 30 kilometers of cycling and running tracks, beach clubs, marinas, a Formula 4 circuit. The Hudayriyat Beach Club is already operational. The residential product is primary villas and townhouses, elevated terrain. Some plots sit at 45 meters above sea level. Sea views that are structurally permanent, not blocked by any future towers. Mudon's master plan is phased across a decade. Current phases are freehold and open to all nationalities. The island is not finished, but that's the point. Buyers entering now are entering before the amenity premium is priced in. So, Abu Dhabi in total Q1 2026, the transactions were 66 billion. Hudayriyat's share, 18% of the entire Emirates volume. One island, 18%. For comparison, Saadiyat Island was 8.8 billion, Al Reem Island was 9.5 billion, and Yas Island also so significant, but behind all three. So, the velocity of capital in Hudayriyat Island in a single quarter is the clearest signal available that institutional and ultra high net worth individual capital has already made the decision. So the question for retail investor is, are you early enough to still benefit from that trajectory? What are the yield predictions? So rental yield projections for Hudayriyat Island is between 8 to 10% gross on villa and townhouse projects. For context, Dubai Palm Jumeirah Villa rental yield is 4 to 6%. In Abu Dhabi Al Reem, apartment yield is roughly around 8.5 to 9%, and Saadiyat between 6 to 8%. Hudayriyat is at 8 to 10%. It is a lifestyle island performing at the same yield tier as Al Reem, which is dense urban residential island. The explanation: short-term rental demand for a lifestyle destination is structurally different to long-term residential demand. Beach access, cycling, infrastructure, marina, these attract premiums. These are projections, not guarantees. Obviously, verify current rental comparables before. 3 Abu Dhabi islands, 3 different investment theses. Al Reem Island, most liquid, apartment-led, urban, entry from about $1 million, best for yield-focused buyers needing exit flexibility. Saadiyat, cultural premium, lure, villas, and apartment mix, entry from 1.5 million, best for long-term appreciation, brand-driven capital. Hudayriyat Island is lifestyle-led. Villas and townhouses project entering from 3 million for townhouses. Best for premium buyers betting on Abu Dhabi's leisure economy. They are not substitutes. They serve a complete different buyer profile. Know which matches your thesis before you look at either one of them. So Hudayriyat is not for every buyer, as I explained previously. It is the right asset if you have about 3 million dirhams or the above to deploy. You have a 5-year plus horizon. You're comfortable with an emerging developer's track record. You believe Abu Dhabi's lifestyle economy is structurally going. It is the wrong asset if you need to exit in 12 to 24 months. You need immediate rental income from an established tenant pool. You're prioritizing liquidity above all other factors. The villa market on Hudayriyat Island is still early. Early markets rewards patience. They punish short-term timelines. 3 risks to price honestly. Firstly, delivery timeline risk. Mudon's residential track record is shorter than Aldar. Projects in the region have historically run late. Factor a buffer into your holding period. Second, liquidity risk. Abu Dhabi's real estate market is obviously thinner than Dubai. Some selling a Hudayriyat villa in 18 months is harder than selling any villa in Dubai. Third, yield is projected, not contracted. STR demand is seasonal and market dependent. So look for 7%, and if anything you get above is an upside. The bull case is real. 46 billion Mudon's backlog. The government-backed infrastructure commitment. 99 nationalities in Abu Dhabi's freehold zone. This is not a speculative market, it is an emerging institutional one. So, if you're interested, DM Hudayriyat and I'll send you a full breakdown, pricing by phases, payment plan options, Mudon's delivery history, and if you're looking at comparable resale data from Reem or Saadiyat, I will share those with you as well.